Bed Bath & Beyond shares are up about 14% right now. They've been bouncing around quite a bit today after a tumultuous week. Our next guest says with bankruptcy imminent, the retailers that stand to gain the most from available market share and store locations will be the off-price segment. Joining us now is Bernstein Analyst Aneesha Sherman. Aneesha, good to see you. So you did a pretty deep dive analysis here of where there are Bed Bath & Beyonds, where they sort of overlap with off-price. Talk to us about that analysis and what you found.
Yeah, so look, there are a lot of competitors that can stand to gain from a Bed Bath & Beyond store shutdown or ultimate dissolution. That includes Target, that includes some of the online retailers, Amazon, Wayfair, IKEA, as well as the off-pricers. But what we did is we looked at Bed Bath & Beyond a little bit more in detail, and we looked at each of the 880 or so stores in the US, and we looked at who's near them. And shockingly, I was really surprised to see that 99% of those stores, every store except a handful, like 7, have an off-pricer within 5-mile radius. And for individual off-pricers, that overlap is 70%. So 70% of Bed Bath & Beyonds are within 5 miles of a Ross, 70% are within 5 miles of a Marshalls, same with a TJ Maxx, same with a Burlington. The numbers are 70 and up. So there's a lot of crossover in terms of the catchment area of these stores, and Bed Bath Beyond is an 80% offline concept. So I believe that most of market share will move offline. People don't quickly switch shopping habits just because one store isn't available. They'll tend to go on their usual shopping route and switch stores. And so, within the 5-mile radius, off-price is most likely to win. They have similar stores. They have about 25 to 30,000 square foot boxes in similar kind of strip malls and plazas. And they are very, very overlapping all around the country. So I think they will be the single biggest beneficiary of the share shift that will likely happen.
Aneesha, before we can get to that point, Bed Bath has to go out of business. And part of that process, should it happen, is aggressive going out of business sales. How does that impact the apparel industry more broadly and the home furnishing sector as well?
Yeah, that's a great point. So so that's usually the first step is, when they do declare bankruptcy, which they haven't done yet, and when they decide their stores are going to close or a certain amount of stores are going to close, they do a big liquidation sale to try to get as much merchandise out to customers directly as possible. So there will be a GOB sale. It will absolutely impact the homeware sector. Now, I think for off-price, that's less of an issue because homewares is already underperforming. They had a phenomenal year in 2021 when everybody moved or bought a home and was redecorating. But then this past year, as we've been going out and doing more experiences and going to weddings and trips and back to work, we're spending less on the home. So the homeware sector for off-price has underperformed this year. So it's a smaller part of the total business than it usually is. So I think the impact will be smaller because it's affecting a smaller slice of the pie. But for the other impact to off price is how much of that inventory clears. This is a super promotional environment right now. Everything is on deal. Customers are looking for those deals. We're hearing that from the companies. And so a lot of inventory might not sell to customers at full price. So a good chunk of it might have to be cleared through liquidators and jobbers in the secondary market. And that's where off-pricers win as well, because they can buy up a lot of this inventory and resell it later through their own channels.
And what kind of flexibility, Aneesha, do the off-price retailers have to hold on to that inventory, right? I mean, I guess in theory, things like towels aren't subject to the same fashion vagaries, right, as a sweater. And so is there a practice that because there is already a decent amount of inventory out there that is not necessarily selling, that they're just going to hold on to it for a while?
That's exactly right. So they have entire warehouses called packaway. At Ross, they call it the hotel because it's short stay, right? And it's entire warehouses just for the purpose of storing extra stuff. I mean, think about it as the analogy of, I go to Costco and I buy a gigantic pack of whatever paper towels and I hold it for the next 6 to 9 months. That is what they're doing at scale. So they're buying whenever they find opportunistic buying, they're storing it in these packaway warehouses. And then when the time is right, they sell it. And so this is an unusual business model. Most retailers don't have a warehouse that is just dedicated to storing extra stuff that they can find on deal for when it's the right time to purchase, to buy it, to sell it. But that's exactly what off-pricers do. And as you said, it's less fashion risk. There's less obsolescence risk because a towel or a rug or a piece of cookware, dinner plates, those are non-seasonal, those are non-fashion trend driven. And so those will likely sell at full price a year from now.
Aneesha, we've seen some really wild trading activity in Bed Bath & Beyond shares, and that continues this week. Really, I think on this view that maybe they turn themselves around or something like that happens and they don't go bankrupt. But based on your experience, once a retailer can't get products on the shelves, once they get into this black vortex of where Bed Bath is now, is there any turnaround possible for this company?
Yeah, I mean, it's always possible. But what we've seen in the recent examples of retailers that have followed a similar path, we think about Pier 1 Imports, think about Sports Authority. If you go back further, Linens and Things that went under in 2008, Forever 21 on the apparel side. I mean, it's hard to turn these businesses around when they're so far down this path. It depends on vendors selling to them on credit. So national brands will need to trust them enough to stock their stores on credit and expect to be paid back. It depends on talent staying in the business. I mean, if you work for Bed Bath & Beyond right now, you need to be willing to stay and hoping that the business turns itself around rather than looking for a new job. So all of these contingencies, and then of course it depends on what kind of debt financing they can secure. So it is possible, but it is the likelihood, each day and each week we go forward, the likelihood goes down.
All right, we'll leave it here. Aneesha Sherman, Bernstein Analyst, always good to see you. We will talk to you soon.